morning. It's 5 a.m. in New York City. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Standing pat, futures steady ahead of the quarterly results from Nvidia and the latest Fed minutes later today. Brace for more. Goldman Sachs President John Waldron sees further market pullback. We'll give you more from our exclusive interview coming up next. And President Trump plans to formally designate Saudi Arabia as a major non-NATO ally following a day of deal-making between Washington and Riyadh. Let's get a look at what's going on in terms of futures after the drops that we saw yesterday and the drops we've seen this month. The worst month since March thus far. S&P futures are down, up 0.3%, as are NASDAQ futures, about 1/3 of 1%. The small caps gaining even more. In terms of the stocks, individual stock stories that you need to know, let's get to Valerie Teitel. She's in London. Valerie?
Good morning, Matt. Let's start with a check in the energy sector. Constellation Energy, this is the U.S.'s largest nuclear power company, up 3.4% in the pre-market after they have secured a $1 billion loan from the Department of Energy used to reopen 3 Mile Island. Now, we heard from Constellation Energy back in September that they wanted to reopen 3 Mile Island in order to fulfill a contract that they signed with Microsoft in order to power their AI needs. So again, we are hearing more and more that nuclear power is going to be used to power this next stage of the AI boom. Now, the power that is not in vogue, that is green energy. We're seeing hydrogen fuel cell developer Plug Power down 14% in the pre-market. This comes after they announced a dilutive convertible bond offering, to the tune of $400 million. Now, this company will use the proceeds from that bond offering in order to pay down debt due next year. So this company needing to do this dilutive measure in order to aid them from a recent debt crunch. Lastly, let's move on to onsemi. This is a chip maker focused in sensors used in the automotive and industrial space, Matt. Those shares are up 3.2% in the pre-market, and this comes after the board signed off on a $6 billion buyback program to be used over the next 3 years. Matt?
Valerie, thanks very much. Valerie Teitel there looking at some of the single stock movers. Later this hour, by the way, we're going to speak to the CIO of Robinhood. Stephanie Guild joins us as she sees continued dip buying in this market, and the dip we can certainly see. First off, President Trump gave the Saudi Crown Prince a lavish reception in Washington yesterday. The two leaders spoke of business opportunities, peace, artificial intelligence, and tech. Trump designated Saudi Arabia as a major non-NATO ally at a dinner in honor of MBS. And the two countries signaled a loosely worded defense cooperation pact, with the Saudis promising to invest as much as $1 trillion in the U.S.
The agreement that we are signing today in many areas in technology, in AI, in earth materials, magnet, etc., that will create a lot of investment opportunities.
So you are doing that now. You're saying to me now that the $600 billion will be $1 trillion.
Definitely, because what we are signing, it will facilitate that, and
I like that very much.
Joining me with the latest is Bloomberg's managing editor for the Middle East and North Africa, Onur Ant. Onur, talk us through what was announced during the Trump MBS meeting.
Well, the two leaders finalized quite a few agreements, Matt. One of the most notable ones was obviously the Saudi-U.S. Strategic Defense Agreement, part of which has to do with Trump's earlier approval to sell F-35 fighter jets to Saudi Arabia. In addition to that, we also found out overnight that the kingdom will purchase about 300 military tanks from the U.S. In addition to that, another important agreement was a memorandum of understanding that they signed on AI. Although that was a preliminary agreement, we expect that to be followed by a more firmer agreement that will allow Saudi companies such as the government-backed Humane to purchase AI chips from the U.S. to power its AI facilities and other facilities that the kingdom is planning to build over the next 10 years or so. And finally, again, as we've just seen in the video from the White House, we've seen that MBS, the de facto leader of Saudi Arabia, increasing his investment pledge to the U.S. from $600 billion to $1 trillion. That's quite important, quite significant for President Trump and the White House, which said that all that money will flow directly into American communities.
And of course, the U.S. and the Saudis have long had a strong relationship since Reagan and the Bush family. It took a breather after the dismemberment and murder of journalist Jamal Khashoggi, but it does look like it's back on the up and up.
That's certainly true. Khashoggi's death was obviously a big shock to the relationship. And yesterday's meeting, if anything, it caps this years-long process during which MBS went from, in Joe Biden's words, a pariah into a key ally for the U.S. And all the deals and the agreements that they have signed and announced yesterday is a testament to that. So yes, definitely this trip by MBS brings the relationship that was always strategic, but somehow suffered a shock after Khashoggi's death at the Saudi consulate in Istanbul in 2018, sort of turned into something that is now equally strategic as it was before that shock was suffered, so to speak.
Owner, thanks so much for joining us. Owner Ant there, joining us out of Dubai. Now turning to the main event of the day, Nvidia earnings. The chip maker set to report results after the closing bell. Joining us now is Matt Bloxham of Bloomberg Intelligence. So Matt, just walk us through what we expect in terms of the reporting quarter and in terms of the outlook.
Yeah, so in terms of the quarter they're reporting now, Q3, the market's looking for revenues of about $55 billion, so that will be up about 57% year on year, and EPS of about $1.25, $1.26. I think more importantly, looking to their Q4, the outlook they'll give, the market's looking for them to kind of guide to around $62 billion. So that would be on revenue, that would be up about 58% year on year. So kind of keeping that same momentum that they're expected to deliver for the Q3. And I guess, beyond that, the market will be looking for anything they can do to kind of provide reassurance that beyond this big hyperscaler investment cycle, there's natural demand coming through from consumers and enterprises to kind of sustain the AI momentum into the midterm.
In terms of generating enough revenue, generating enough profit to justify their investment, Nvidia is not one of those companies that worries this market, right? I mean, they're not trading at incredibly high valuations.
No, I think, well, I'd say the near term, not a problem at all. They've got like kind of up to $500 billion of kind of expected revenue over the next 12 months or so that they talked about recently. And that's kind of underpinned by the hyperscalers investment cycle. The question is if that investment cycle doesn't get end customer demand from enterprise and consumers, then that hyperscaler investment cycle will come to an end quicker than expected, and that would then become a problem for the midterm growth outlook for Nvidia. But for the kind of near term, I think they're in a very comfortable position, incredibly high margins, 75% gross margin business, so in a strong position.
China deliveries have stopped and I think are no longer accounted for in their forecast. What do you expect, though, from the future of that business?
It's a good question, and I think no one really knows for sure, but my sense would be that it's going to continue to be a very difficult market for Nvidia to kind of play in, even if the US relaxes restrictions on them selling into China. I think the Chinese market's pivoted. The Chinese government is encouraging its domestic firms to source locally from the likes of Huawei. So even if Nvidia gets back into that market in a meaningful way, they're going to find competition much tougher than when they were there before.
Matt, always great to catch up. Matt Bloxham there of Bloomberg Intelligence runs our Nvidia and tech coverage out of London. Now, tune into our exclusive interview with the CEO of Nvidia, Jensen Huang, after those earnings. That'll be at 6:30 p.m. Eastern tonight. And, of course, we'll be replaying that interview for you throughout the day. tomorrow. Now let's get on to some of the other top stories trending on the Bloomberg terminal this morning. The Dutch government suspended its powers over chipmaker Nexperia, restoring control to the Chinese owner. According to the Dutch Economic Affairs Minister, the order that gave the Netherlands the power to block or revise decisions at Nexperia was dropped as a show of goodwill. The spat over control of the chipmaker disrupted automakers from Honda Motor to Volkswagen. UK inflation fell for the first time in 7 months. Consumer prices increased 3.6% in October compared to the year earlier. The drop was driven by energy prices rising less than they did in October of 2024. The latest numbers keep alive hopes of a Bank of England rate cut when it meets on December 18th. And China escalated its retaliation against Japan, suspending imports of Japanese seafood and halting approvals for new films. Signs that the diplomatic spat is far from over. Beijing had also suspended talks on resuming beef imports and warned Chinese citizens against traveling to Japan. Relations between the two countries soured after the Japanese Prime Minister Sanae Takaichi became the first sitting Japanese leader in decades to publicly link a Taiwan Strait crisis with the potential deployment of Japanese troops. Coming up, Goldman Sachs President John Waldron says there's more market declines to come, but they could be modest. Our exclusive interview at the Bloomberg New Economy Forum next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York City. The S&P 500 is down more than 3% on the month, on course for the worst month since March. Former Barclays CEO Bob Diamond called it a healthy correction at the Bloomberg New Economy Forum in Singapore. Goldman Sachs President John Waldron echoed that sentiment, speaking exclusively to our own Francine Lacroix.
I would say you're seeing in the markets right now a pullback, which I think is healthy. Markets have run quite a bit this year, U.S. equity markets in particular. Markets heavily focused on this AI dynamic. Are we going to get the returns on capital invested that the market expects and is priced in? It's a big debate. We're going to see the Nvidia earnings later today. That'll be a very important moment for the markets. Second topic I think is very much on the minds of investors is labor. We've had government shutdown, which is obviously behind us now, but the statistics will lag and the data will lag. So the market is not quite sure what to make of labor. So I would say labor is a major issue and a major concern. And the third topic, I think, is inflation, which remains pretty stubbornly high. And we obviously saw in the election cycle in the U.S. a lot of focus on affordability. And so I think those three topics are really shaping markets right now. Markets have had a good run. And so you're seeing investors kind of pull back and I would say protect gains.
Do you think we need more of a correction? Like, when do you know, or is the AI in an actual bubble?
Well, I think we'll find out in Nvidia's earnings today, kind of what they say about their own prospects, which has been a bellwether, and I think will have some impact on the psyche of the marketplace. It strikes me that the market could pull back further from here. I do think that the technicals are kind of more biased for more protection and more downside, more short activity, more macro hedging, and kind of protecting the gains that have been garnered this year. So I think there probably is a bit more bias to the negative, but I don't know that it'll be that much more pronounced from here. It worries me because anytime you see that much increase in credit formation in a short period of time, you wonder about standards, underwriting standards. And we've seen, in certain examples that have been well reported, standards have come down, terms have weakened, pricing has tightened. And so there is classic late stage behavior going on in credit. But that doesn't mean that we're going to have a credit crisis. It just, frankly, the most important thing is economic fundamentals. If the economy hangs in there, the credit markets will be fine. And I would say you're going to see more credit formation coming in 26 because I think you'll see deregulation in the banking sector, principally in the United States, which will release more capital into the economy and will create more lending in the economy, which probably keeps spreads tighter and probably keeps more supply of credit, which is actually needed because governments are pretty fully levered. And the private sector is going to have to come in and finance a lot of this AI investment, decarbonization, investment in energy and the like. So I think you'll see credit markets continue to be pretty constructive as long as the economy hangs in there.
But what are the real risks, though, that we're not looking at if you worry about underwriting? And there's then at
subprime. I think there'll be more problem. I predict more problems in subprime. I do think the weakest part of the economy is that lower end consumer, and there has been a lot of lending into the subprime parts of the economy. So I wouldn't be surprised to see more issues arise in the subprime lending arena. We worry a bit about leverage in the equity markets, particularly around wealth investing, levered ETFs and more investing in more levered form as you get asset prices that are rising. I think that extra leverage is concerning. So those are areas that we would be focused on and worried about. But again, economic fundamentals will be the most important thing.
That was John Waldron of Goldman Sachs speaking with Bloomberg's Francine Lacroix at the Bloomberg Economy Forum in Singapore. Now, in terms of markets, we do see a bit of a recovery today in futures. S&P 500 futures up 0.3%. The Bloomberg U.S. Dollar Index on the rise this morning, up about 0.1% at 12.21. And the U.S. 10-year yields resume, I should say, their gains as investors feel comfortable enough to sell off that debt. Look at cable here, 131.22, as you see a bit of a drop in the pound. The UK 10-year at 4.550 as we get the first reversal in inflation in 7 months, and the FTSE gaining about 0.1%. Coming up, the U.S. Congress is set to send a bill to President Trump to force the release of the Jeffrey Epstein files. That and a look at what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. In the latest episode of Chief Future Officer, Bloomberg's Anna Edwards spoke with Standard Chartered CFO Diego DiGiorgi. Let's take a listen.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. So what we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
And that was Diego DiGiorgi, the Standard Chartered CFO, speaking with Anna Edwards. You can catch the full interview of Chief Future Officer tonight at 9:30 p.m. Eastern, and I do highly recommend it. It's a fantastic program. Time now for your front page news. First up on the Washington Post, Congress is poised to send a bill to President Donald Trump to force the Justice Department to release files related to Jeffrey Epstein. The House passed the bill on a 427-1 vote, and the Senate agreed to deem the legislation passed as soon as it arrives from the House with no changes. Next up on the Wall Street Journal, Elon Musk's artificial intelligence company xAI is in advanced talks to raise $15 billion in new equity at a $230 billion valuation. The new valuation would represent a significant increase from the $113 billion xAI disclosed after acquiring Musk's social media site X in March. In fact, it's just about double that. And on the New York Times, President Trump is said to have authorized CIA plans for covert action in Venezuela. Sources say Trump has also authorized a new round of back-channel negotiations that at one point resulted in President Nicolas Maduro offering to step down after a delay of a couple years, a proposal that the White House rejected. In terms of markets in Europe right now, the live trade doesn't look so bad. The FTSE is up 1 or 0.2%. The CAC down just about the same, and the DAX up 0.1%. So a mixed trade there after the big drops we saw yesterday. Coming up here in New York, Stephanie Guild, the CIO of Robinhood, joins us to talk about whether or not investors are buying this dip. It's the biggest monthly drop we've had since March of this year. It's the worst November that we've had since the great financial crisis in 2008, and yet we're only down 3%. Some are calling that a correction, the pause that refreshes. This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Standing pat, futures steady ahead of the quarterly results from Nvidia. They come out after the closing bell. Brace for more. Goldman Sachs President John Waldron sees further market pullback, although it could be modest, he said in an exclusive interview coming up. And President Trump plans to formally designate Saudi Arabia as a major non-NATO ally following a day of deal-making in Washington and Riyadh. He said MBS knew nothing of the killing of journalist Jamal Khashoggi. In terms of the markets right now, we see an S&P futures rise of about 1/3%, so increasing from a half hour ago. The NASDAQ futures up now 0.4%, and Russell 2000 futures, those small caps, gaining almost 0.5% in the pre-market. For some stocks to watch, let's get over to Valerie Teitel. She's standing by in London.
Good morning, Matt. Let's start with a check in the energy space. We're seeing shares of Constellation Energy in the green, up 3.5% in pre-market. Now, this is the U.S.'s largest developer of nuclear energy. They secured a government loan to the tune of $1 billion to aid them in reopening 3 Mile Island. Now, we did hear back in September that Constellation Energy wanted to reopen 3 Mile Island, and that is mostly to fulfill a contract they signed with Microsoft in order to power its AI needs. So again, this is telling us that nuclear power is really at the forefront when it comes to this energy race, and government backing is behind it. Let's move on to another energy source where government backing is lacking these days. That is green energy. The hydrogen fuel cell developer Plug Power is plummeting in the pre-market, down over 16%, and the most actively traded share in the pre-market so far this morning. This comes after they announced a dilutive convertible bond offering in order to pay down debt that's due next year. Lastly, let's end in the chip space on semiconductor. Now, this company makes sensors in the automotive and industrial space. Shares are higher this morning by the tune of 3.25% after the board authorized a $6 billion buyback program to take place over the next 3 years. Matt?
Valerie, thanks very much. Valerie Teitel there with a look at your movers. Joining us now is Stephanie Guild, CIO of Robinhood, and it's always good to get data from you because you have such a fantastic view of the retail investor. I know that this doesn't seem like that big of a dip yet, so it seems a little bit silly to call it a correction.
In crypto was, I'd say.
Okay, so, and that's important, I guess, to a large cohort of your investors. Are they buying the dip?
On the stock side, there's been a small net buy, not huge amounts like we'd seen in the past, but this dip is, I mean, it's kind of normal. and I actually would love a correction, and if you could wish that into existence, because it would just make some opportunity.
A 5 to 10% drop.
Yeah, like a real correction. The names we've been seeing them by actually are in this whole tech space, like CoreWeave, Nvidia's in there, Meta. Like it's been mostly in the space that's been hurt the most. And that's pretty common for our customer base. But on the crypto side, There's been some dip buying, but again, the volumes haven't been as big as in other points when the markets were down way more.
Which is interesting because that's where you see a real correction.
Yeah.
I mean, we were at $126,000 on Bitcoin, dropped down to $89,000, and so many people, you know, when we were up at those highs, must have been saying, if only it would sell off a little so I could get back in here.
Yeah.
Are they not piling back in?
I mean, again, I'm looking at the last few days of data,
Right.
So maybe today, because you are starting to see a turnaround in some of the, you know.
Starting to see 93,000.
Yeah, Ethereum is starting to come back. So, I mean, maybe that's driving it because I haven't looked at this morning's volumes in overnight.
So what does the AI bubble debate look like to you? Because there are companies like Nvidia, we were just talking about with Matthew Blockson from Bloomberg Intelligence, that make a ton of money and show still massive revenue gains. It justifies their investment, certainly. But then there are companies like OpenAI, obviously not publicly traded, but they want to invest $1.4 trillion and they only have, what, 14 billion in revenue.
Yeah, I mean, Oracle, I think, has become like kind of the proxy for some of those moves, and we've seen that totally round trip. It's increased from September. I mean, I think some of it is not unfounded in the fact that, like, I guess there's some people in the market that haven't forgotten about what happened in 2000, and including me. I was around for that. So I think there is some concern because there has been such a movement of money that you kind of can't tell where it's going. And while I do believe, you know, in AI in the longer term and the benefit of it, I do think you also, as an investor, at those valuations that we had, have to look at, like, how much CapEx growth is happening versus sales growth. And, you know, is that getting to a point where it's getting too much? And I think when Amazon is borrowing money for it, you know, that's, and also cutting jobs, so, you know, you're kind of like, okay, where's the focus? And are you going to get the return on invested capital?
Does it, I mean, when we see companies like Amazon or we see companies like Google borrowing money, does it really bother you that a company with trillions of dollars in market cap is borrowing like double-digit billions?
I mean,
it's a bit like the OpenAI problem in reverse, right?
Yeah, I mean, Amazon, like, can they afford to pay the debt on that? Like, are they net earnings yet? I feel like their net earnings were still not, like, amazing.
That's always the case with Amazon,
yeah,
right?
Like,
they turn it on, they turn it off.
Right. I mean, market cap doesn't matter that much as you know, you look at a company like Nebius, which is really small, and they increased their debt from $980 million to $3 billion in this past quarter. That's maybe a little more concerning. They're also part of the whole AI trade. So I'm a little bit like, sure, can Amazon handle it? Probably, but I think it's just, again, starting to question, like, will we get the returns from the money that they're spending and borrowing? And I still think that's a little bit of a question because it's so probably far in the future to really see it through.
In terms of the rates and the layoffs, what do you see happening with the Fed and how much does it matter to this market?
I think the Fed matters a little less than it used to. I think the president and their actions matter a little more. But I think the Fed is a little bit between a rock and a hard place. I've shared this in other places, so sorry if you've heard this, but if you think about what happened in Europe post-2008, you had like one ECB and one monetary policy and one currency. Across all those countries, that Germany was doing fantastic and probably needed higher rates. Spain and Greece needed lower rates. And I'm a little worried that because we have this like bifurcation of economies, you know, where you have like the lower end that really needs help, and then you have, you know, the stock market, and you have the tech sector that doesn't need necessarily that help and probably needs some calibration, that I worry that they are kind of stuck between those two things. The labor market showed that the biggest layoffs are still coming from the government, but I think that's starting to change a little bit, because if they're raising money and cutting jobs like Amazon, then...
Yeah, we saw really a ton of layoffs in October, really starting to push higher, and yet obviously the top quintile is still doing fairly well. President Trump has talked about reviving the stimmies, right? Another $2,000 check going out to the lower half.
That is just what's going to happen. How do you get long-term rates down if you're going to take the money that you earn to pay down your deficits and then give it away instead of paying down the deficits? Like, I think the 10-year and thus mortgage rates might be stuck unless there's some other stimulus that comes in to force mortgage rates down.
But would be fantastic for Robinhood, right? And for this market. I mean, retail investors, Wall Street bets, they're still running on full power.
Yeah, but I'd like a solid economy that doesn't need stimulus to operate and grow.
What do you like outside of the AI trade? I mean, we were just talking about Constellation Energy, as Valerie was showing it. Obviously, power generation has been huge. You need the picks and shovels. Caterpillar has done really well. Are there sectors entirely divorced, though, from AI that you like?
I mean, I don't know if you could say it's divorced, but so in October, we started increasing allocation to healthcare in our Robinhood strategies. And we actually, last week, increased some T-bill exposure because I felt like the market was giving you signs that it was going to sell off a bit. So we wanted to protect some capital. But in the healthcare space, we'd been allocated to names like Natera and Lilly. And we took down some tech in replacement of that just to take some profits. We do also own like the rare earth materials. We have an allocation there. We have an allocation to stocks like Vistra and Constellation Energy. But defense, like kind of industrial defense to me, is also a place that over the longer term should benefit from a lot of the policies that have been put in place. Hegseth was, talking to I forget what the phrase he used, but it was something about like making CapEx
great again
in the defense space and kind of making it competitive again in terms of who gets contracts. And I think there's like a wider swath versus like the two biggest names in the space that could benefit from that.
Stephanie, I'm going to take your Europe post-2008 analogy and run with it over the next few days. So if you hear it coming out of my mouth on my program, Open Interest, at 9 o'clock, don't be surprised. Stephanie Guild there from Robinhood. Coming up, Washington and Riyadh strengthening ties after a day of deal making and a little bit of backslapping at the White House. More on that next. This is Bloomberg.
The agreement that we are signing today in many areas in technology, in AI, in earth materials, magnet, etc., that will create a lot of investment opportunities.
So you are doing that now. You're saying to me now that the 600 billion will be 1 trillion.
Definitely, because what we are signing, it will facilitate that. And
I like that very much.
Saudi Crown Prince Mohammed bin Salman vaguely pledging that Riyadh will invest as much as $1 trillion in the U.S., helped out a little bit by President Trump, who said he'll officially designate Saudi Arabia as a, quote, major non-NATO ally. He also said MBS knew nothing about the dismemberment and murder of journalist Jamal Khashoggi. Let's bring in Bloomberg government senior Congress reporter Jonathan Tamari in Washington. So it does look like the diplomatic ties between the U.S. and Saudi Arabia are fully healed from that brief respite we had after the Khashoggi murder. How is this going to work, though, in terms of, for example, selling Saudi Arabia F-35s? There are other allies in the region who may have problems with that.
Yeah, I mean, this is going to be a concern for Israel, for one thing, to name one very close U.S. ally. And some of the details, honestly, are a little bit vague, both on the Saudi investments that are coming to the U.S., supposedly, and on the U.S. commitments to Saudi. I mean, there are many steps still left to go, and exactly how all these things will play out. Commitment to sell F-35, to allow advanced AI chips to be sold to Saudi Arabia. So the details were left pretty unclear yesterday. But as you kind of saw from those images, maybe the biggest thing that concretely happened yesterday is a rehabilitation of the image, the way the president greeted MBS, the flyover of jets, a lavish state dinner at night, that basically says that the tension from the Khashoggi killing and other issues in the Trump administration is at least gone.
In terms of rehabilitation, we also saw Elon Musk making his return to the White House. Have those tensions thawed as well?
At least a little bit. The fact that he's there, and you remember the attacks that he and the president were launching at each other. So it is remarkable to see him there. I think the next step we're going to look for is, does he get back involved politically? Does he start donating money to candidates in the midterm elections? And is that a positive or a negative thing for Republicans? Because Democrats used Musk against Republicans pretty effectively last year, but obviously he has a lot of money that can aid candidates around the country.
President Trump also spoke about his Fed chair pick. Here's Bloomberg's Anne-Marie Horton at the White House event.
We're getting closer to the end of the year. Have you started the interviews for the Fed chair?
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused.
All right. I guess he was pointing at Scott Bessent. I mean, can I make that assumption?
That seems likely that is who he was pointing to. And Bessent has seemed to indicate he's not going to take the job. He's mentioned 5 different candidates, including current and former Fed governors, economic advisor Kevin Hassett, Rick Ryder of BlackRock. We know the president, likes a little bit of drama. He was the host of a show about, making big hires. So Bessent has said that they're looking for kind of towards the later end of December to hopefully have an announcement. The president at one point said every now and again he likes to go politically correct, so maybe it'll be a more conventional choice. But as I mentioned, he likes the drama. He likes to keep people guessing, and so we'll have to keep watching.
All right, Jonathan, thanks very much for joining us. Bloomberg Government's Jonathan Tamari there in Washington. Appreciate your time so early this morning. Let's turn to earnings now. Investors counting down to the results from Nvidia set to come out after the market closed. Joining us again is Matt Bloxham of Bloomberg Intelligence. So this is, in some respects, the big event, Matt. On another level, though, this isn't like the company that people are really that worried about. They still are going to grow revenue, 60%, regardless of which quarter we're talking about, and make a massive amount of money. What are margins looking like?
Yeah, margin's probably like in the 74-75% range. So it's like a hugely profitable company, and that's generating the cash that essentially is getting cycled back into the AI economy. And obviously they did a deal, announced a deal yesterday to invest more in Anthropic. So yeah, I think in the near term for sure, Nvidia is not a company that people worry about too much, because they are the big beneficiary of all of the capital spending that's coming out of the likes of Google and Meta. And Amazon, all kind of this huge demand for their AI accelerator chips. I guess, it's a bit further down the line, maybe 2 to 3 years out, where perhaps things become a little bit more clouded if the end user demand from corporates and enterprises doesn't pick up to kind of sustain the AI investments. And obviously there is competition there for them from the likes of Google and AMD, who are developing their own AI accelerator chips too.
What are you looking for today, Matt? I mean, are we going to see any sign of wilting end user demand? Are we going to see any sign of stronger competition in, for example, today's outlook?
Yeah. I don't think so. I mean, they're still clearly the market leader by some distance. And I think at the end user level, the momentum, certainly with corporates, is improving. I think, I'm not sure if we'll see too much detail, but I think what people would really like to see is some kind of more case studies, some real specifics about how big corporates are deploying AI, the kind of return on investment they're getting, and the fact that they plan to kind of continue to expand the scope of AI within their organizations. And Jensen Huang alludes to that a lot in his kind of big picture talks. He's talked about this kind of virtuous cycle that we're now in, and that we're kind of beyond Moore's law. But I think the more they can do to kind of show specific examples of that end user demand will give people more confidence. But I don't think we'll get too much of that later today.
All right, Matt, thanks very much for joining us. Matt Bloxham there of Bloomberg Intelligence runs our tech coverage for us out of London. Don't miss our exclusive interview with the CEO of Nvidia, Jensen Huang, after those earnings, is going to sit down with Ed Ludlow at 6:30 p.m. Eastern, and you'll see it right here on Bloomberg TV, be able to hear it on Bloomberg Radio. And of course, we'll continue to play that for you throughout the day tomorrow. Sticking with earnings, we'll hear from major retailers before the bell, including Target, Lowe's, and TJ Maxx. TJX joining us now is Bloomberg consumer reporter Maddie Parker. So, Maddie, what do we expect to hear from these retailers, as so many, I mean, John Waldron even voicing concern about the state of the U.S. consumer?
Yeah, totally. I mean, obviously Target are kind of the main results that are going to come out. Today, they're going to be watched very closely by consumers, by other retail brands, and also by Wall Street. It'll be really interesting to see whether in the third quarter they're kind of able to recapture some of their growth as they transition under their new CEO, who they appointed in February this year. He very much said he was going to focus on merchandising and technology, but it'll be really interesting to see, obviously, whether they hit the mark during kind of that key back-to-school period with consumers who are really kind of looking for good quality groceries and daily essentials, but obviously at reasonable prices as well.
All right, so who's expected to deliver the strongest gains here? I mean, typically a company like TJ Maxx does well in an economy where the consumer is weakening.
Yeah, definitely. I think obviously the kind of compounding inflation over the past few years, it will likely kind of give an edge to some of those kind of discount stores. So people like TJ Maxx may well kind of benefit from that. They're able to procure inventory and obviously sell it on at more of a discount to consumers. They're feeling the pinch from inflation. They're obviously also feeling the pinch from, things that retailers have been warning about for months, like tariffs raising prices for consumers. So it'll be really interesting, obviously, as we approach this kind of festive period as well, to see whether consumers are kind of going for those more discount things, whether they're taking advantage of those sales as well.
So more sales here. What about jobs? Are we going to see more hiring into the holidays, or are we going to see that slow down from past seasons?
Well, traditionally, yeah, retailers do definitely hire more. They kind of hire some of those seasonal workers as they approach the holiday period. I suspect that, retailers, despite kind of the wider kind of consumer uncertainty and consumer sentiment, has definitely taken a hit across lots of different markets. The kind of golden quarter of retail that we're approaching, so that includes Thanksgiving, it includes Black Friday and Christmas, will still likely see very strong sales, we're hoping. So, they may well kind of bring in more employees just for that period. But it'll be interesting to see kind of exactly how consumers respond and whether retailers kind of have a very strong quarter towards the end of the year.
All right, Maddie, thanks very much for joining us. Bloomberg's Maddie Parker talking U.S. retail earnings. We're going to get those throughout the day. Coming up, we're going to get you set up for your trading day with Nvidia earnings, really the key event on deck, and Fed Minutes. This is Bloomberg. Let's take a look now at what's ahead today. As we said before the break, retail earnings are coming out. Target is reporting, as well as Lowe's and TJ Maxx before the bell. Then we get the Fed releasing its latest minutes. That's at 2 p.m. Eastern, has in the past moved the market, so definitely important to pay attention to that, especially if you're focused on rates or FX. But the main event for this market is Nvidia. It reports earnings after the market close, and we're expecting to see massive 60% gains in revenue, as Matthew Bloxham said, more than 70% margins as well. Tune into a conversation with Lawrence Wong, Singapore Prime Minister and Minister for Finance, with Bloomberg Editor-in-Chief John Micklethwaite from the Bloomberg New Economy Forum. And then, of course, after Nvidia earnings, Ed Ludlow is going to sit down with the CEO, Jensen Huang. In terms of the share movement before the market open, Nvidia shares up about 0.8% in the pre-market. This is Bloomberg.